I think we've seen increased volatility after a very strong and pretty steady rise early this year. Since August, we've seen gold whipsawed as we've seen varying degrees of whether stimulus is coming, whether it isn't. And I expect that to continue over the coming weeks as we head up to Election Day.
Doug, do you have a year-end price target for gold?
Well, I think we'll continue to see new highs. I think even if we don't see a decision on a new stimulus package pre-election, I think there's a certain inevitability that there'll have to be more moves, and I think that will drive gold still further. When we did break 2,000 earlier this year, it did so pretty aggressively, and I think what we've seen subsequently is a little bit of profit taking, but the overall outlook for gold still looks very positive for the end of this year and into next.
Talk to us about mining companies and the impact this pandemic has had on them and also on their bottom lines and their ability to do their job.
Yeah, we saw a lot of mine closures or suspensions earlier this year as a response by various governments to the COVID outbreak. But overall, these higher gold prices have led to very strong balance sheets. I think from the majors, they're in a very good position to take advantage of these high gold prices. We're seeing companies that haven't paid dividends in 5-6 years reinstitute dividend policies. And I think, rather than mergers and acquisitions, which has been typically a move by the majors, we've seen a strengthening of the balance sheet this year. And I think that will probably lead to more corporate actions next year. We are dealing with a declining, probably peak gold production has taken place. And now we've got companies that, it's a declining resource base they're mining every year. So they've got a very strong balance sheet to affect corporate actions in the space.
Doug, I've seen one estimate out there recently from a reputable Wall Street firm that gold prices might hit $10,000 over the next decade. If an investor were to believe a call like that, how should they position for that right now?
Yeah, I hope that we don't see those kinds of prices, because I think it will ultimately mean that the world is a lot more messed up than perhaps we're already dealing with right now. The reality is anything over, even the prices we're at now are very healthy, provide very healthy margins for gold companies. In terms of positioning, we've seen a big push both in gold ETFs and physical buying from the US Mint increasing, even as before COVID, back summer of 2019. But ultimately, I'm a big believer as someone building a gold mine right now, that probably the best way to play the gold prices is companies that are actually producing gold, or companies such as Great Bear I'm a director of, that are looking like they've made one of the largest new gold discoveries in recent years. So, I think a combination of all of that, but the early money has been moving into the big gold producers, and I think there'll be a trickle down effect from them on at least in the gold equity side of things.
Hi, Jared Blickery here. Just want to ask you about the central banks of the world kind of de-dollarizing, buying gold. That's a trend we've seen for the last few years, Russia and China mainly. Is this a trend that you've seen continuing throughout the pandemic? Do you see it continuing into the future?
Yeah, Jared, I think, we've been so inundated, obviously, with tragic headlines with regard to COVID over the last 7-8 months, that we forget that there were really strong tailwinds, that led into this market. I think what the pandemic has done has accelerate and amplify issues that were already in the system. And you saw central banks making moves well in advance of COVID. I think that will continue. I think, against a backdrop of currency debasement and the threat of inflation, I think we'll continue to see that action moving forward.